Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, taking a look at the market that's losing a little bit of its power here as it tries to continue that rally that we saw off the lows from a couple of weeks ago. Certainly last Friday's price action, kind of emblematic, I think, of what's going to happen going forward, where we have kind of a big range, no change in this market. VIX around that 16 to 18 regime, I think, is about right. Valuations a little bit cheaper, still rich, but until bonds go up significantly, I think the market can digest that. So a couple stocks the market's digesting from bullish side. One is Alibaba, that saw some huge kind of call paper coming in over the past couple days. Stock looking much better today, up about $5. I think that 177.50 level that was the lows will hold here, so I'm selling out of the money put spreads out in April to be a buyer at lower levels, collecting some comparatively rich premium. IV still above the 50th percentile, so selling the April 177.5 puts, hedging by buying the 175 puts, collecting about 65 cents net credit. Willing to be a buyer. If not, I keep that premium. Stock that I don't like here is Herbalife. This has been one of the best performers of the year, up over 40% year to date. Basically everything that could go well has gone well for Herbalife. We have Bill Ackman famously covering his short position for about $1 billion net loss on that. We had a stock split, a name change, buybacks, Dutch auction. Today, Citigroup came out and upped it to a buy. Yet the stock's struggling to break out to fresh new highs, kind of like the fact that it's floundering even with all that good news behind it. So I'm just using the fact that implied vol really is tempered a lot. Going out to April, buying the at-the-money 95 puts for about $3, just looking for that stock, which is up about 40%, to maybe have a 5 to 7% pullback somewhere along the way here, which would double these options, given the fact the stock's trading around the 95 level. On the unusual option front, we saw huge volume yesterday in the Principal Financial Group. July 70 calls way out of the money. More importantly, the implied vol jumped from 21 to over 24. Stock was up about 70 cents. These calls, which are about a 12 delta, jumped about 60 cents. So I'm jumping in, selling those comparatively rich options, hedging by selling the July 55 puts, which also raised in kind due to put call parity, just looking to capture that huge vol spike, leaning slightly bullishly with that call buyer out there. So we'll see what this week brings. A lot of stuff on the macro front, so should be interesting week. We probably will see continued, at least, volatility intraday. We'll see if this rally continues and we break out the new highs, which I think we won't, or if we kind of hold here and chop back and forth. So until next time, as always, here's the good trading. Take care.